Hello, hello. Hey, good afternoon, good afternoon. How are you guys doing out there today? Elaine Proby here, CEO, PROBY'S Tax and Accounting. Let me make sure we're live here on IG. All right. Get some lighting up in here. How are you guys doing out there today? This is Elaine Proby, CEO, PROBY'S Tax and Accounting. Here again on this beautiful Thursday afternoon. Getting you guys some well-needed information. I think I'm going to love this topic today, you guys, and I'm sure you guys will love it too. I am very excited that a lot of people is diversifying their portfolio. A lot of people are into more investments because everyone is, figuring ways of how they can make more money and investing and, in different ways of how they can extend their dollars. And I'm very excited about this today because we're going to talk about investment in the stock market and how it's going to affect your taxes. And the reason why we're going to have this topic today, because I noticed in the last year, after doing so many tax returns, that a lot of people had a lot of stock investment that they did. There was Bitcoins, there was a lot of stuff, and a lot of people have invested in the stock market in the last year. And I was excited to see all of those statements. So that tells me that everyone is focusing more on their finances and making sure that at least they are diversifying their portfolio and they're investing not only in real estate, but they're investing in stocks. And so I'm very excited to see that because now that tells me that, people are really paying more attention to where their dollars go and how they can earn more money on it. Because as we know, when you have it sitting in a savings account, for the most part, there's not that much interest. So everybody is more concerned about making more money on their money. So I'm very excited about this topic today, guys. So right now, today, we're going to talk about the tax effect on your stock investment. I'll let you know, when are you taxed on that money and, how you're taxing that money and how much you have to pay in taxes on the money that you do make from your investment in the stock market. And then we'll talk about how you can save. Now, we always want this part. We always end with this. You guys stick around because the whole idea is how you can save. So you want to make the money, but you also don't want to pay it all back in taxes. So we usually end on a good note about how you can save on these investments. So I want to thank all you guys for jumping in here today. Hey, how are you doing over here? All right. So let's jump right in here, guys, real quick and talk about the stock market, investing in the stock market. And the thing about it is that when you buy stocks, that money is invested in different ways. And so for the most part, everyone knows that they purchase some stocks and then they, watch it and see what it does. However, what are the tax effect, right? So I wanted to explain. Once you have your money invested in the stock market, no matter what stock you're buying, once you have your money invested in there, guys, and if you do no transactions whatsoever, you're just investing, you're purchasing stocks, you're just investing, and you have no actual transaction of any type of sale, you don't have to worry about any kind of taxes, right? Nothing is taxable at this point. You're just investing money. You're letting your money sit and letting it grow. Hopefully, that's the whole idea, right? Letting it grow. But then there won't be any taxes at this point, okay? So until you have a taxable you can have a taxable transaction until you sell. Whenever you decide that you wanted to make a transaction of sale of a stock, and of course, if you have any gain from that stock, is the only time you got to be concerned about taxes on that transaction, okay? So this is what I want you guys to pay attention to. I know a lot of times, like I said, you invest your money in the stock market, and while you're there, you don't have to worry about any type of taxes. All you got to make sure is the money stay invested. You keep watching the market. If you have a person that is on top of your, if you have a financial person that's paying attention to that, or if you're doing it yourself. And again, in the last year, so many people are doing it themselves. There's so many ways that you can do it yourself. There's so many apps that you can work with. So this makes it so much easier as well. You don't have to get some major stockbroker because, of course, a lot of us are just, getting our feet wet in the market. So we're not investing a whole lot of money because we're trying to understand how it works. So it's very good that you can do this yourself through a lot of these apps, which is excellent. So until you have a transaction, let's say you buy some stocks and then now you're going to sell off these stocks because you want to, the stocks have earned some money. They worth more than when you purchase them. When this happens is when you want to sell these stocks. So say you want to sell these stocks now, and if you have a gain when you sell, which means that you sold it for more than you purchased it for, okay? So if you spend, let's say, $2,000 in buying the stocks, guys, and you sell it for, say, $3,000, now that $1,000 is considered a gain. So this is the only time you have to worry about taxes is when you have a transaction where you have sold for more than you paid, then there you have a taxable gain on the stock. So this is the only time when your taxes, your stocks are taxed, okay? You have to have a transaction of a purchase and a sale, all right? And then the sale has to be a gain. If you lost money, you don't have to worry about any kind of taxes. Of course, if you make money, you have to pay taxes. Now, one other thing when you have to pay taxes, guys, when you purchase stock is if the stocks have gained interest and dividend. Now, you don't have to sell at this point in time. You don't have to sell any of the stocks. But if there's interest or dividend earned on those stocks, you pay taxes on the interest and you pay taxes on the dividend, okay? So you don't pay taxes on your stock sale because you haven't sold anything. You just have your money invested. But there's interest and there's dividend that's earned on those stocks. You have to pay taxes on that amount. Okay, so, and you guys will get statements on this stuff. You don't have to worry about it. Whoever you use for your investment, you will get a statement at the end of the year. It will show your interest. It will show the dividend that you earn, and you will use that for your taxes. Of course, whenever there's a sale, then that transaction will show up. And at that point in time is when we determine how much gain did you have. And then that's when you pay the taxes. Okay, so that's my first point today. When are you taxed? And you have to have a gain on a sale to be taxed, or interest and dividend on your stock purchases. All right, so let's move on to the second point today, guys. How much are you taxed? How much do you pay taxes? How much do you pay on these taxes? All right, so hey, Thomas Silver, thanks for jumping in. All right, so how much are you taxed? Lerner Smith, thank you for jumping on. How much are you taxed on your gain on the sale? Okay, so again, if you didn't make any money on it, don't have to worry about taxes. You don't have to worry about how much you get taxed. However, you are taxed based on how long you keep these stocks for, guys. So I'm sure you guys, hear it all the time. There is what they call the long-term gain, and there's what they call the short-term gain. Okay, so this is how you're taxed. The long-term gain is any stocks investment that you keep over 1 year. It's considered long term. Over 1 year is considered long term. Okay, and the reason we want it, I'll explain to you why we need to know what's long term and what is short term. Long term is over 1 year. Short term is less than a year. So if you put some money in the stock market, you buy some stock, and if you keep that money there longer than a year before you sell, then it's considered a long-term gain. If you sell within a year's time, if you buy some stocks today and you sell within a year's time, it's considered short-term gain. Now, the reason we need to make sure that we know the difference between the long-term and the short-term gain, guys, is because they're taxed differently, okay? The stocks that is invested for long-term, which is over a year, you pay less taxes on those, all right? So let me say this again. You pay less taxes on the long-term stocks. So if you keep an investment for over a year, you can pay less taxes on the money that you gain from selling those stocks if you have them over a year. Short-term gain, guys, you are taxed at your regular tax rate. So just imagine if you are in a tax bracket, let's say, based on your income. And again, all this tax rate is based on your income. So if you're in a tax bracket, for instance, let's say 24%, or even the highest tax bracket, which is up to 37%. If you sell some stocks, say that $1,000, let's say you bought it for $2,000, you sold it at $3,000, and you made $1,000 worth of gain. If that was on a short-term basis, and let's say you're in a 24% or a 37% tax bracket, guys, it will cost you about $370 in taxes, okay? However, if it was on a long-term gain, let's say you had those stocks over a year, you'll be taxed based on your income. Again, all the stuff, everything is based on income. You'll be taxed at the rate at 20%, which is at $200, right? 20% of $1,000, that's $200. So it's $200 versus $370. That's the difference. That's why you want to make sure that you know the difference between the short-term gain, less than a year, and the long-term gain, which is stocks that you hold for over a year. Okay, so this is how much you get taxed. 20% max based on income. It could be 15% if you make less. And short-term gain at your ordinary tax bracket, which could be anywhere from 24% to 37% on the high end. Right? So that's how much you are going to pay in taxes. All right. Hey, Karen Jones, thanks for jumping on. Good to see you. Hi, Cognac. Thanks for jumping on here. All right. Tone, thank you. So now let's go to my third point. My third point, of course, this is the one everybody always want to know. How can you save? How do you save money? This is what we want to do. We want to make money. Of course, again, the big deal here, we want to make money. Again, we don't want to pay it all in taxes. So how can you save on taxes? I have 3 good points right here. You guys make some notes on here. Hit like and share on this. This is awesome. How can you save, right? So this is what you want to do. Now, let's say you have some money invested, of course, in the stock market, which is what we're talking about. And you have some stocks that is really gaining, and you have sold those stocks and you are making money. Now, on the other hand, there might be stocks that you do have that are really not making any money. You've been sitting on these stocks and you've been thinking, well, it doesn't look like they will make any money anytime soon. So what you want to do, guys, you want to leverage this. And this is great. I love this. So what you want to do, you want to sell off those stocks that are really not making any money. You want to get rid of them anyway. So this is a perfect time. If you have stocks that you're gaining money on and you have stocks that's losing money, you want to sell those stocks off. The reason for that is because the ones that's not making any money is going to be at a loss. And the one that is making money is going to be at a gain. So this is the leverage. So what happens now is the loss will offset your gain and reduce your taxable income, right? Did you get that? Love it, right? So, and a lot of times you have stocks that's sitting there that's really not making any money, not going anywhere. This is the perfect time with you. Again, let me repeat this. You leverage the stocks that are really not making any money. You want to sell it in the year when you are actually having stocks that is gaining money so that you can take those losses to offset the gain and you have less taxable income. So that's perfect. I love that. All right. So that is one of the ways that you could save. The second thing is what you could do is invest in stocks that are that are into things like the 401k pension plans, investments that are in the 401k, investments that are in IRA. These are great areas to invest in stocks because what happens is, for instance, you don't have to pay taxes on that gain until you pull the money out of that IRA. And one of the beautiful part is if you have a Roth IRA, there is no taxes on the gain, no taxes on the money that it's earned. When you pull that Roth IRA, there's no taxes on the money earned. Those are great vehicle, guys, for your stock money to be invested in investments like the 401ks, like the IRAs. You got a traditional IRA, you got a Roth IRA. These are excellent places. And this is how you save on your taxes. Now, there's a lot of other ways, guys. I want to make this any more complicated than it really is right now. So those are ways that you can save on the taxes. All right. So, hi, Inez. Thanks for jumping on. Thanks for jumping on here. Okay, we got a question over here. Let's see. Cognac. Great information. Okay, well, thank you. Great information. Thank you. Thank you. All right. See, I love it right here. Great information. See, people can really use this stuff. Again, like I said, it is very, very useful. This is just some basic information here, guys. There's a lot more we can get into, but I don't want to make it any more complicated. Today, what we're talking about is the tax effect on your stock investment. And again, like I said, I am very excited. A whole lot of my clients this year had came with forms that they have all invested in stocks. People are diversifying. Money's in the bank is not gaining any interest, and everyone is interested in their money earning more money. And I love it. Investing. This is awesome. Stay on top of it and learn some of this basic stuff. And again, today, what we talked about is the tax effect on the investing in the stock market, guys. And I did 3 points. When are you taxed? And you're taxed when you have a transaction, when you buy and you sell, and you have a gain. If there's a loss, there's no taxes. If you have a gain, you'll be taxed, right? So that's when you're taxed. And if you do no transaction whatsoever, you're taxed on dividend interest that money earned. Second point, again, today, how much are you taxed? Again, it depends on how long you keep those stocks for. There's long-term gain, there's short-term gain. Long-term gain based on your income can be taxed anywhere from 15 up to 20%. And on the short-term gain, guys, you're taxed at your regular tax rate, which could be up to 37% based on your income again and what tax bracket you're in. Okay, so that's how much you're taxed. And how you save, you hold those investments, you leverage your, your losses against your gain. So if you have bad stocks, you want to sell them off, leverage that against the taxes that you can sell at a gain, and or invest in vehicle like the pension plan, IRAs, and 401ks and Roth IRAs and things like that. Okay, so those are my 3 points today. Again, learning. Hi, Rod, how you doing? Hey, how you doing? Okay, so guys, those are my 3 points today. I want you guys to really make some notes of this because, again, I'm very excited. People are diversifying and just learning some of the basic stuff because, one, the more money you invest, the more money you make, the more taxes you pay. However, if you know the effect of the taxes, you can figure out ways to save, and so that you pay less money in taxes. Again, our whole point here is to keep more money in your pocket, to build some wealth. So make sure that you guys keep more money in your pocket. This is why we're here today, giving you these great information. All right. So that's it for me today. I want to remind you guys that we have our 5-day challenge coming up next month. I want you guys to join the challenge. You can go to www.elainesdesk.com. Go to elainesdesk.com, guys. There's information in the 5-day challenge. Any one of you guys out there who's interested in getting the business started, want to know what to do about getting it started, how to get it started, how to name it, you want to learn how to stay in compliance, how to keep your business, get it off the ground and get going. And then, of course, we'll be able to teach you how all that works. You guys are going to enjoy that. I'm sure you're going to get a lot out of it. So you guys look out for our 5-day challenge coming up. We will definitely make sure that you guys get some very useful information. I guarantee you, once you get this business going, get it started, we'll teach you how to keep it running, how to make money. All right, that's what we're here for. All right, guys. So with that said, I want to thank all you guys for jumping on here again. Let's see. Well, you got info. Let's see. Thank you guys again for jumping in. We'll be back next week with some more valid information. If you guys have any question about any of this stuff, be free to call us here at PROBY'S Tax and Accounting, 323-290-9034, and or visit our website at PROBY'Stax.com. Yes, and Karen, yes, you can join. I definitely want you in this course. Karen, guys, have started her business. I'm very excited. She had a grand opening last week. I think she had a grand opening last week, and that was great at Bombay Lounge in Hatfield. I'm very proud of you guys. That was amazing. Karen have been watching the lives, and she have learned so much from it, and I'm very excited about her and all the other people who have made use of these lives and all this great information. Okay, so Karen is going to join our 5-day challenge, guys. Make sure that you get that information. Karen, thank you so much. And anyone else out there, you guys share this information. Get all your folks involved. All right. So turn on your notification. I love my Thursday. Keep telling me what to do. Turn on your notification, guys, so you guys can stay on top of all this stuff. Okay. Again, with that said, 5-day challenge coming up. Go to www.elainesdesk.com for more information to sign and to join up for the 5-day challenge. You will be very excited. Get your business off the ground. I have people who have already signed up, guys, and so we have so many spaces. Make sure that you get in there, and you will learn a whole lot how to grow your business. Start it, grow it, make money. All right. With that said, I'm out of here, guys. I want y'all to take care of each other and take care of yourself. Thanks for joining. Bye-bye.